episode 5 of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about all of this month's finreg and fintech news. Now, again, it's been a busy May, or start of May, in keeping with the first half of this year has been pretty hectic from a finreg front. So one of the biggest things that happened in the US was the SEC finally finalised its regulation coming from Dodd-Frank. It may be a decade or so late, but we now have the implementation regulation SBSR for securities-based swap repository reporting. It's approved the DTCC as the first data repository for such reporting, and the deadline is in November 8th this year. So that's going to be a big deadline for anyone in reg reporting and reg tech and compliance this year, because it's the last and final part of the Dodd-Frank reporting for derivatives. So that's very big news, I must say. Now in the UK's FCA has also produced a really interesting paper this month on cybersecurity best practices within the industry. There was a lot of discussion in the paper about clouds as an area mentioned of an area for significant improvement, and highlighting some of the attacks that firms have faced throughout the last 12 months, including those related to insider threats and inadequate supply chain oversight and security with third-party service providers. Now, looking at cloud, they can sometimes be behind service providers. So you may have a cloud service provider that's a fourth-party supply chain provider or a fifth-party supply chain provider. So transparency across all of the different providers that you may have as part of a software as a service implementation, for example, was highlighted as something that's very important to monitor. Now, the FCA is likely to begin trying to encourage much more transparency around this, market improvements and practice and governance around this topic. So I think that's another area that's common across regulators because of the focus post-COVID crisis on operational resilience and operational risk reduction. So it's interesting to also think about how we're now all working remotely and moving. Some are moving back into the office. That's another big topic this year. The start of this year has been the gradual move in the US and the UK in particular by large investment banks back into the office. JP Morgan and Goldman Sachs have both said that they're going to have staff back in the office by mid to end of June. So that's certainly a very aggressive timeline. But in the meantime, we have all jumped onto these web conference platforms very quickly. I'm speaking via one at the moment. So that's certainly something of an area that could be improved from a cybersecurity perspective. So certainly that's another topic I think the regulator is keen to see much more transparency and monitoring of in terms of service providers that maybe not the most obvious ones when it comes to a fintech perspective. The topic that's always been close to my heart is the move to shorten the settlement cycle, and that was another progress point at the end of April. I was very pleased to see the commitment by SIFMA and the ICI to support the DTC's proposals to shorten the settlement cycle in the US to T+1. Now, there's been a lot of discussion across industry groups in both Asia and Europe as well. There's some resistance, don't get me wrong, there's certainly some resistance to the move. And there's a lot of discussion about the cost-benefit analysis of shortening the settlement cycle. So again, progress, but we still have a lot of work ahead of us as an industry to move the ball forward on this topic. And I think that's something that ESMA will be likely keeping a close eye on as well as part of the review of CSDR. And that implementation at the end of this year. So certainly we've got a lot of moving parts on the settlement side, not least of which is also a swift proposal to introduce a unique transaction identifier in the securities markets. Now, we already have one in the securities finance space under SFTR in the EU, and we have the UTI as a part of the derivatives reporting regime under EMIR. So this would be an extension of that type of transaction identifier to the full spectrum of asset classes out there, with the intent of improving transparency and monitoring of the full settlement cycle. So it's a big topic, and I expect there's going to be a lot of industry discussion on that topic as well throughout the year, and I will be fostering some of it because I'm a big standards fan, and I believe that the introduction of standards makes it much easier, for example, to move from a legacy infrastructure to a newer infrastructure. If you've got common data standards, you can have interoperability across the different types of fintech that you may be using. So another big topic to monitor this year. Now, my final thoughts for this month are all about the GameStop hearings, and I sat through the third and final GameStop hearing, all 4 hours of it, earlier this month, and sort of summarised some of the discussions that happened. I'll call it the chat roulette that happened with Fintech and finreg individuals, Gary Gensler, we had Mike Bodson from the DCC, and the full gamut of the US House Financial Services Committee asking questions. Now, there were a lot of interesting questions asked, not all of them relating to GameStop, I must admit. I think it was quite wide-ranging. Everything from the gig economy to climate change and diversity were on the cards for the few hours that the hearing was held over. What can we expect from listening to all of these things? Well, certainly, for sure, we're going to get a report on the full implications of the GameStop incident from the SEC. We expect that by the summer. It's going to examine things like the gamification of trading, the use of data analytics and AI to influence retail trading behaviour. And that is an interesting one because obviously we've got a lot more apps out there that do turn trading into somewhat of a game, if you think about some of the icons and things like that to encourage behaviour. It's also going to be covering market concentration within the market maker and brokerage realm. A big topic that came out of the previous hearings. There's been a lot of discussion about payment for order flow and short selling disclosures. As part of that, the Archegos incident also plays into this, and the influence of hedge funds on the market is another big topic that's come out of this. So certainly a lot of different areas that directly relate to GameStop. Another thing that we'll be able to see is the strengthening of regulation best interest, or Reg BI, as part of this post-GameStop agenda. Gensler, during the meeting said, or the hearing I should say, indicated that he's not going to be rewriting these broker conflicts of interest rules entirely at the moment. The SEC is actually going to focus on strengthening them. So this may be through the enforcement measures that they may be adding in. Although it's relatively vague at the moment, we haven't got a clear idea of what's going to happen there. Another thing that came out of the Archegos, I'm not sure how you pronounce it, incident in April was a talking point about how to foster greater transparency in the total return swaps area. So that's another area we're going to see some degree of transparency requirements, reporting requirements, and around securities lending transparency. So if you think about it, I mentioned earlier in the EU we have SFTR. We could see some reporting requirements of a similar nature in the US. So that's a big topic for reg tech firms to be keeping an eye on. Now, another really popular topic, but though it's not really related to GameStop at all, was cryptocurrency regulation during the briefing. There's not much detail on that. Gensler's been under pressure during his confirmation hearing and this particular hearing about the topic of regulating crypto, although he did commit to saying that the team is examining the regulation of crypto exchanges for investor protection purposes. So that does indicate that there's going to be some degree of cooperation between the SEC and the CFTC as part of this dedicated digital asset working group that we've heard about before. So we'll see more compliance requirements for that sector, perhaps more institutionalization of the sector as a result of that. So very big news for the crypto world during the hearing, even though it's not directly regulated or discussion related to GameStop. So another big topic that wasn't at all related to GameStop was climate change, disclosure rules, and ESG. That was something that kept cropping out throughout the hearing, continuation from what happened at the confirmation hearing for Gensler. He actually stressed the need for public engagement in the current request for comments that the SEC has out until the end of June. And he noted that there's a dedicated workforce in the SEC looking at climate change disclosure. And also on the topic of diversity, as part of the S in the ESG, Gensler confirmed that another area they're looking at, this particular working group, is diversity reporting for corporate boards. So that's certainly a huge amount of things that the regulatory community in the US are working on, and we'll be seeing much more activity around those topics coming forward into the rest of 2021 and into 2022 and beyond, no doubt, because of so many different topics of different areas, completely different areas of focus. It'll be interesting to see which get prioritised by the SEC and the politicians, because with so many diverse topics, you really do have to focus your efforts to getting regulation past the line. There may be some resistance on the part of the political side of things, so certainly we won't expect it to be an easy road for pushing through reforms, but we certainly do expect to see more of those.